is Martin from Sept, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis, where we look at what happened in the market based on technical charts and then try to understand and plan for a better trading week for the upcoming week that's starting from tomorrow, September 9, Monday, 2024. So, a lot of exciting things. Let's get into the charts first. So, you see that it's the weekly charts on the left side and daily charts on the right side. That's for the Nifty first and then Banknifty next. For Nifty, you see a narrowing wedge, ascending wedge, and let us hit the top of that and then slightly moving down. In the daily also you have a wedge and it's at the bottom of that wedge right now, somewhere near to that. And if you look at the Banknifty, the wedge is even more narrow, and on the daily of the Banknifty, the price has fallen below the 20 exponential moving average and fallen towards the bottom of that parallel channel. So that's what it is. So basically, Nifty has cracked down after 4 consecutive weeks of up move, making new highs every week, and then finally trapping the bulls and then creating a bearish engulfing pattern on the charts. So it's 1.53. It's nearly 400 points down on Nifty, losing to the exponential moving average, and the big rounding number 25k as well. So it's a pose of 66% of rally from the last June, not last June, June of 2022. That's where the previous swing major low is. Banknifty is also cracked down. It was first of all weaker than the Nifty, and I also ended with a bearish engulfing pattern, losing the 20 exponential moving average and closing negative 1.5%. That's 780 points down. That's how the candlesticks look like. It's a bearish engulfing. It's extremely bullish pattern. Same with Banknifty also. Wide range bearish candle that's engulfing the previous candle, and definitely this is a reversal. But how long the reversal will find a support, we can look at the problem this later on. So it is a definite bearish weekly panel. This is a weekly candlestick, so it makes it even more bearish. On the daily candles, you can see that for the last 4 days, Monday it made the new highs and then it camped down and then tried to move up, but ended up with the bearish candle and further fall down with an even more bearish wireless candle. So it was a week that went sliding down, a week where heavy selling pressure was there. Same can be seen in the Banknifty also. So Tuesday it made a new high, not a new high, a recent new high, and then could not sustain that and then fall down most of the days. So that's a kind of sliding fall that you see on the daily candles of the Nifty and the Banknifty. So it's a bull trap, trapping the bulls, falling down after making a false up move. And it's a bearish engulfing, both are deadly bearish candles. Let's see on both the indices and daily candles also wide range, very wide range, bearish, large candlesticks indicating this lower high patterns. Not at form of the Nifty, but Banknifty, it is still there. It does more or less conform towards the next lower low. And Bollinger Bands, if you see, you can see that so the expansion is halted. It's a bearish bias because it's below the median. Actually, it's almost below the median. You can say median is it's taking a support of the median of the bands, but it's more or less a bearish bias. You can say Bollinger Bands consolidation or sideways move is what it indicates. But clear closing below the median on the Banknifty and consolidation there as well. Short term, absolute consolidation, no expansion either side. Sideways consolidation is what the Bollinger Bands are talking about, right? That's about the candlesticks, patterns, Bollinger Bands and all that. Now, let's move on and see how the momentum has performed. Momentum has taken a dip and falling to the sideways in the Banknifty, but momentum is intact with Nifty on the medium term or weekly candles, as you see here. In short term, more than the Nifty and the Banknifty, it has taken a dip in the sideways. Right? You are seeing the momentum based on the RSI. Now, bottom below, you see the trend indicators. Trend indicator is also showing Banknifty is still struggling the bear zones, while Nifty is maintaining that bullishness only in the medium term. So that's the story. So momentum and the trend indicators based on the RSI and the ADX on analysis on high time frames and long time frames, weekly and daily indicator just definitely got hit with the and struggled with those, and Nifty hit bad, pushing it to sideways, and negative trend on the short term. Right side, you have the India VIX, which has spiked up 14% and climbed above the 15 to the median of volatile range. So, which has also shot up with Friday's big fall. On the last week's big fall, the VIX had seen a spike of 14%. Right? So, VIX spikes up when there is fear in the market. So, some kind of fear is what the sell-off is, what indicates clearly. Now, if you see the open interest analysis of the options and the futures, the F&O sector, if you see that in the futures, open interest is showing long unwinding, which is bearish in nature, and short build up in the Banknifty futures line. The options eye for the is for the next upcoming weekly expiry of September 11th for Banknifty and 12th for Nifty. Is showing that the PCR is bearish, 0.61 for Nifty and 0.56 in the Banknifty. So definitely open interest is showing the negative bias clearly. Now we can find the support and resistance based on the technical charts, and we also have the technical charts based on the open interest for the Nifty and the Banknifty. So for the Nifty, the major support is seen at 24,500, or highest put writing is there, and the resistance major is seen at 25,200, where the highest call writing is there. Second highest of put and call writing is at 25,000. Banknifty 50,000 and 51,500 is where the highest put and call writing is seen on the Banknifty. Second highest is at 51,000. Right. So 25,000 and 51,000 are crucial resistances. Right. And supports. So that's the crucial zone. Right. So when we try to understand what are the levels based on the technical charts, levels for the support and resistance, I mean, we can see that the first major resistance would be the 25,000. That's a big rounding number. Yeah. If that is clear, then you have 25,333 all-time high, and then 25,750 zone where the 50% retracement level is there. Not retracement, Fibonacci extension level on the upside. So downside, the first support could be at 2400, big rounding number is there. 20 exponential moving average is breached, so now the 50 exponential moving average will come near to be 24,500. That is breached. 100 exponential moving average is at 23,800, but before that you have the 24,000 rounding number. So those will be the zones where the resistance and supports of the Nifty and the Banknifty. It's still towards the bottom of the channel. The retest could happen at 49,655. Which of that could easily take it to 49,000, where the confluence of Fibonacci retracement and previous support zones are there. Total moving average is way down there at 48,373. Right. So those are the supports, and down upside the first resistance could come in at 51,000 nearby, where the 20 exponential moving average is there, and after that it can find resistance in near to 52,000. Right, that's the previous resistance zone, and after that 52,830 is the next resistance on the upside. So that's how the levels are marked here. Right, so 24,000 is a major resistance to take out now that it has reached to, and 334 would be the all-time highs that just take out if it managed to breach the 25,000 resistance. downside 24,750, 24,750, 24,473. These are all moving average supports, and 24,000 and 23,894 would be supports. Nifty similarly sees good resistances at 51,200 and then 51,980, 52,000 near that zone. Right. Supports would be mainly at 50,000. If that is breached, it can go down as 49,655 and 49,000 respectively downside. That's what we incur from the charts. Let's quickly move it and see how the different industrial sectors perform. Sector indices are showing that all of the sectors have got hit. None of them is up. IT sector 1.4% down. Metal sector 2.7% down. Auto sector 2.45% down. Pharma 0.74%, slightly hit only. FMC also slightly hit only. But reality is 2%. So all sectors have got hit badly, and the sectors that are still eligible to take long, first to take long positions will be what? It's the IT sector and the pharma sector. Both are defensive sectors, where the momentum is still remaining bullish zones in the medium term as well as in the short term. All of the sectors have either of this gone to the sideways momentum. Let us stay west. Right. So that's exactly what has happened. You have only the defensive sectors to protect the market. Chart can easily be so the IT sector is on the top. The breakout is happening. Couple and breakout, and momentum was taken as support and then bounced up. Still intact. Metal was retracing, trying to move up, but sees resistance at the RSI 60 zone. Auto was at resistance, was consolidating, momentum it's taken a dip and then trying to consolidate. Pharma was all-time high and at extremely bullish zones, and hanging on there, or seeing the profit booking there. FMCG also at the very top, consolidating, momentum rising up in the extreme bullish zones. Reality was consolidating in a small retracement, has come in and struggling at the support zones of bullish zones of RSI 60. So in a nutshell, you have the defensive IT and the pharma, which is holding on in the bull zones. Others are all having troubles in the short-term momentum. That's what you can make out. So none of them are falling into the bear zones. Is a very positive thing that we can make out. Heavyweight stocks, Banknifty, HDFC Bank, the stock that's contributed maximum to the index is still at that resistance of RSI in the sideways zones, even with huge volume spikes that happened a few months back. So sideways HDFC Bank. Reliance also is facing resistance of RSI, and then you can clearly see it's falling down. Big red candle is formed, and momentum in the short term is also formed with bear zones almost Reliance. So that's negative. IGC Bank holding on the bullish momentum, but red candle last week. Infosys is trying to hold on there, but red candles formed on both. Momentum is just managing to hang on there. That's what is holding the market. So only thing that's holding market is ICICI Bank, and then the IT stocks. Kodak Bank just consolidating as usual within a range. ITC is at the top and then consolidating. So ITC also is supporting the market along with the ICICI Bank and the IT stocks. So that's what heavyweight stocks are doing. If you look at the broader market, the mid cap and small cap, both of them have got hit, but momentum is intact in the medium term. Not very far from the all-time high. Right. Well, it has got hit is what you have to make a note. It is across the market, across the sector, across the heavyweight sell-off that happened on Friday. Or last week primarily. Institutional participation, if you see, it is buying overall. Even the FIs are buying 2,400. So 30 week or something, the FIs have been buying ever since the Fed cut was anticipated. Domestic institutions were also bought 7,442. So naturally it's positive that institutions are buying more. FNO portions, clients are bullish, but FIs are not bullish on neither the futures nor the options. FNO, FIDI data is showing that here like that. But yeah, institutions are buying overall is a good thing. And derivatives overall, net portions also moved up last week. So institutional participation is positive slightly, even though the market has fallen down. So if you look at the global markets and currencies and global commodities, we see some troubles there, especially the US market. We'll come to that. First, let's see the currency market, which is just always falling down and consolidating, not at blocking the recent lows, retesting in it's more bearish in falling momentum. 101.19 is what all this is. Has been falling nearly 1% last 2 weeks. It's always falling, and you will be gaining. No, it remains to be weak and instead spiking towards the 84 levels. 0.14% up used INR this week. So rupee is weak is a concern. The dollar is cooling off. It's a good thing. Crude oil is 7.5% down. Crude oil crash. That's a big news. 68 big wide range bearish candle. Momentum fallen to the bear zones. So crude oil is falling is good for an oil importing country like ours, but not good for the oil market companies like Reliance. Because of that, it will fall deeply into the bear zones on short term. Gold, the hedging instrument, is not ready to even pull back, or at least it's spiking up and up at the very top, right? Rising bullish momentum. But overall, if you see, gold also was flattish down 0.25% last week, although the momentum is rising up in bulls also in the medium term. So gold spikes up when the market crashes. That's obvious, and since market is heated up too much, the hedging instrument gold also holds that. So that's about it. Now, US markets, if you see, there's a widely bearish candle on the Dow Jones, bearish candle again on Nasdaq, and bearish candle wide range on the S&P 500 also. So it's a good hit back, nearly 3% down on Dow Jones, Nasdaq 6% nearly down, and 4% down on S&P 500, 4.25% down. So all a red US markets. That's not good news for our market, right? So gold is at the peak, crude is falling, is positive, but rupee is not strengthening, is bad, and US markets are red, deep red. That's trouble. So global news are not that great. That's the reason why market had got hit back last week as well. Volatile got hit when the global news turned bad. Now, why the global news are turning bad? Could be Russian fears popping up again, right? Posteriors, the Fed rate and Russian fears and all this mixed back feelings until that no eventual cut comes in the September month. So I have to wait for some more. That's about the analysis, and then just pick up few stocks for the next week. So Asian Prime is having bullish momentum trend and big volumes, and it seems like it's broken a trend line, and then it could easily move towards the all-time high. So that's about 1.5 for a short term, and we can wait for this rounding pattern breakout and go for long term as well. Asian Paints, good, right? Patience is good volumes, trend and momentum with a breakout of a trend line, decent RiskReward. Hindustan Unilever, that's a defensive sector, FMCG sector. It has been retracing since several months now, and good scope towards the top of the trend line channel. And the rounding pattern breakout possibilities there. Have tight stop loss, but volumes are not that extremely great. But if volume is also picking along with the momentum of the trend bullishness that is seen here, then it could be good RiskReward. Now we can give at least 1:3. If you're going for more than 3 weeks. Positional trades, swing trades easily can give 1:2. Reasons for trade is price patterns, bullishness, momentum. Volumes slightly concerned, but I hope volumes good. When the breakout really happens from this zone, volumes could also spike up if it all happens. But have tight stop losses here. The sector also is positive as of now. So in this Unilever, Asian Paints, 2 long side picks for the next week or more than 2 or 3 weeks. Up to 2-3 weeks, no positional play. Swing play, not positional. Now, FNO strategy, if you look, actionable is a bear call spread, calendar spread. Bear call calendar spread is giving a probability of profit of 74% and decent RiskReward if you're exiting early, and very good range. No allow strategy on the downside. So the market falls for the down. You don't gain, you don't lose much. You not lose anything actually, you will gain. But if actually remains there, you will make profit. Estimated premium requirements for one lot of this list of fund strategy is just 20,000. Probably a little more, but yeah, very less margin, and then risk is completely defined. And that's how we have to play. The reasoning for taking this weekly options strategy on Nifty is because I'm slightly bearish, but not 100% bearish. Not slightly, it's medium term bearishness. So basically 25,000 is the OTM on the call side that we are selling, and we are taking a hedge on the next week. 25,300 call. That's a far OTM. So it's a bear call and it's a current response because we are taking a far OTM for far week. Okay, so that's the final strategy for the Nifty options for the next week. Let's just try to wrap it up. So market cracked down, no doubt about that, from the top, forming engulfing bearish patterns on both indices, losing the momentum of the trend in the short term. Bank indexes was weak and it has become even more weak. So the correction so far, what has happened in this 50% kind of rally from the previous lows of 1 year is 10 to 11% only. It's a correction. So it had been breaking out with multiple cloud patterns and flag patterns and all this. Let's try to bucket together different factors in favor of the bulls and the bears. If you see, fewer things have come out in favor of the bulls now. So the FIs is still buying more is positive. Mid and small cap is still not too far from the ATH. Is also a favorable thing. And momentum of the trend, medium term, the Nifty is still maintaining bullishness, so a positive thing. Heavyweights in the sectoral indices, if you see heavyweight stocks and all, they're hit bad, but they're not being hit worse into the bear zone. So that's still managing to be in that zone of sideways or slightly bullish still. So that's can be considered as it may change in the coming week, but as of now, things are not as bad. That's what these are the factors in favor of the bulls. But in the favor of the bears for the next week, a lot of things have turned bad. Bearish engulfing patterns with a bear trap pattern also seen on the weekly candles on both the indices, Nifty and the Banknifty both. So lower low high pattern is still there, price action is still there in the Banknifty. That's bearish. Sideways momentum and bearish trend is what we see suddenly from the bullish momentum and the bullish trend all of a sudden. So that's negative. Futures OI is bearish. Options OI is also bearish because of the PCR less than 1 and far away from that. Ascending wedge, we have already seen the first chart itself. It can break down at some point in time and it can be a deep correction. So US market is red and it's 3 to 6% of fall that has happened last week. So wide range bearishness is seen there in the candlestick pattern weekly on the US indices. So that could reflect in our market also if that continues further. So bearish biased contraction is seen in the Bollinger Bands with the Banknifty especially. So market has turned to be contraction, not an expansion any longer, not even in the Nifty. So VIX is rising, we can see it's above 15, so we have to be cautious. There is fear in the market and the market can crack down. No major corrections have happened so far. It's only small corrections of 5 to 10 banks that has happened. So you have to be always. So I've been talking about this maintaining caution, and market is heated up and struck since last so many weeks or several months. I had been saying that I always maintain a mild bearish view even when the market was making all-time highs. So I continue to do that. This time a little more intense because of the price action and the candlestick patterns. We're just shouting out that it is bearishness, right? So to be cautious from taking long positions. Even if you're have tight stop losses, corrections can come anytime. And when it comes, that's the time when you have to buy in. If you're an investor, right? Don't try to play derivatives when the market is cracking down. It's like trying to catch a falling knife, right? So next week, 24,000 and 25,500 is the range, wider range is what I see on the Nifty, and 49,000 to 50,000 is the range that I see on the Banknifty. So this 24,000 and 50,000 is very crucial. That levels, if it is maintained, then there's some hope that markets can retrace or consolidate and then gain a phenomenal energy to take the next leg. So if that is not needed, then we have a deeper portion of 10 to 20% that may be coming. So keep a note of that. So I always say hedge your positions, play it safe, hedge it at your portion level and also at your portfolio level. Using different lessons, different strategies in the technical playlist. You can check out that. Option strategies can be used for making rental incomes, by covered calls and cash record puts and all that. All these strategies are there in the playlist. Check out that. That's all I have. All my bearish bias view is what market view is what I have, right? So corrections are natural. It can happen when least expected. So it can happen to an extent where we may never anticipate. Sometimes it can continue like this, the small correction of 5%, and then once again more. All these are properties. All that we have to know is, do we have it stop loss to exit for your strategy, short term or long term, and stick to your plans, and then hedge is all that we can do, right? So that's all I have. Please subscribe if you think that content is good, and then consider liking and providing your feedback and all that, and share to others as well, right? I'm active in the X along with other multiple platforms where daily basis technical analysis are posted. So if you want to subscribe, you may do that as well. That's all I have. Happy trading, happy learning, happy investing. Bye bye.